Model that we have is we have a relationship manager who meets clients, tries and markets the bank's products and gets business for the bank. We have an analyst team which prepares proposals looking at balance sheets, looking at various industry data, and they prepare a proposal which is then submitted to the credit department for review and approval. So at my end, what I do is I review these credit proposals. I have a discussion with the analyst team as well as the relationship manager on what's the requirement of the client, why are we comfortable giving a loan to this particular client, and using various analysis, we arrive at a conclusion that how much should we give and is this client credit worthy. So a typical day will involve reading proposals, meeting RMs and credit analysts, arriving at a final conclusion and approving a loan. We also have monitoring which happens for various accounts which we've already approved loans. So that happens on a daily basis. And we also have various meetings with clients which typically happen on a regular basis for trying and understanding how is the industry performing and how is that particular client performing. So I'll take you through 3 examples of how a bank approves a loan. These are very broad level assumptions and do not consider this the only criteria. Let's take an example of an individual, a corporate and a bank. So an individual, for example, if you approach a bank and ask for a loan for a home, you want to buy a home and you want to take a home loan, the bank will look at the following criteria. One is how much of your net salary comes into your account in every month. So they will look at your bank statement and they will arrive at what is the average salary. They will generally take a period of 6 months. They will then minus anything which is your monthly commitments, which could be existing loans that you have. You've already taken a car loan and there is an outflow from the account. They will also keep some buffer for your monthly expenses, your living expenses. You need to buy clothes, you need to buy food, you need to pay your electricity bills and so on and so forth. After subtracting that, they will arrive at a value, and based on that value is what your monthly EMI can fit into. So as long as you apply for a loan where the monthly EMI is lower than that amount, they typically will sanction it. They also consider various things like your credit bureau score. So if you have defaulted on existing loans, there is a credit bureau where this data will appear, and they will generally reject this kind of a loan where there is a bad performance in the credit bureau. This is an example of an individual. In case of a corporate, we look at various parameters including who's the management and the promoters who are backing this company. We will look at cash flows. So for example, will the company generate enough cash to repay our loan? We will look at various things like what is the industry? Is it going through a downturn? Is the project or the particular business that the company is undertaking, is it a risky business which could be exposed to various things like government bans, things which are like environmentally hazardous businesses. So that's generally what we consider. We also will look at credit bureau history. We will check with other banks how this particular client is performing. We will check with industry participants, that is like buyers who are buying this product from the company on terms of is the quality up to the mark. We will check with suppliers who are supplying material to this company. Is the supply, are they finding any repayment issues? So a lot of checks are done before we sanction a corporate loan. The third example is of a bank. Banks are very different entities because they generally do not sell in terms of, it's not like a normal corporate where you will buy material and sell a product. Banks generally we will assess based on their financials. We take into consideration things like capital. What is the capital that the bank has versus regulatory requirements? We will take into consideration asset quality. Are there loans, good quality loans? Are they to risky sectors? Are repayments on track? Are you seeing particular overdues which are resulting in higher NPLs? We look at the management, who's backing this bank, as well as who's running the show. I started off doing an M.B.A in finance, and after that I got a job at HDFC Bank. This was through a reference. Someone put my CV onto my manager's table and I got called for an interview. I worked there for 2 years because it was a very entry-level kind of role, and then I got an opportunity to work at Standard Chartered. So I started working at Standard Chartered as an MIS analyst. Over the years, I've been moving roles within Standard Chartered. So I moved from MIS analyst, I moved on to an entry-level role in supply chain finance as a credit officer. And post that, once the organization appreciates your work, they will give you an opportunity to move into higher roles. So I moved into a corporate credit risk as an approver. I handle middle markets, which is clients with generally a turnover between 250 to 500 crores. Then I moved on to large corporates, which is clients with turnovers up to 3,000 crores. And also global clients. So for example, the Hindustan Unilevers or the Vodafones of the world, we have given loans in India based on the overall global relationship. So I did this till about April this year. I've recently started off a new role as the financial credit officer for institutions and banks. This is a South Asia role which looks at the countries including India, Bangladesh, Sri Lanka, Nepal and Bhutan. As a credit officer, you will look at various things like the financials, who's the management of this bank, what is the asset quality, are they giving good loans, are they having high NPA levels. You look at the liquidity, you look at market risk. So a number of parameters are taken into consideration while approving loans for these banks. The basic qualification for the role which I'm currently doing is a minimum of an M.B.A. finance or a chartered accountancy. We do prefer people who have had past banking experience. We generally do not pick up freshers at this level because it's a very responsible role, and frankly what you're doing is you're lending money to another company. So we prefer people who have had prior work experience. After completing an M.B.A. finance, a student can always try and enter a bank as at an entry level. Generally, it's difficult getting senior positions in the bank without relevant work experience. So there are various roles that you could do. If you're interested in retail banking, you could apply as a branch staff. If you're interested in corporate banking, we have entry-level positions within corporate banking which do not involve any high kind of risk where the bank can have issues. So I would suggest that the student start off at an entry-level position in a bank, either corporate or retail, and then grow within the bank. As you gain years of work experience, people will also notice you depending on the quality of your work and provide you opportunities. So generally the way banks are working today is there's a lot of focus on marketing because that's where the money comes into the bank. So you will find jobs as far as marketing or sales is concerned much easier as compared to getting a job as a finance analyst or a credit analyst. I would believe that networking is something which is very important. In my case, it has been networking which has helped me get a role into this bank as well as my previous organization. Also, if you are from a top tier B school, you will have the opportunities of campus placements, which is something which corporates approach the campus, and you will have interviews in the campus itself, and then you will be eligible for jobs within that corporate. Within the organization, you will have internal job postings. This is what we have in our bank. You will have a portal where you could go and check out all open positions within the organization, not just in India but abroad. You could apply, and all applications have an interview round.
Okay. And do you encourage a lot of internships and all within the organization?
So the bank has a program which is called the International Graduate Program. We pick up interns from top tier B schools. This is all done by HR, it's not done at our level. And these international graduates are given the opportunity of working in various departments of the bank. They end up doing stints for like 3 to 6 months within the departments that they choose. And after the period of 1.5 years, they are allowed to choose where they would like to work. Of course, that also depends on the openings that are available in that unit. So, in a bank or an NBFC, the credit approver is approving loans for another client. In case of an insurance company, the person who's underwriting is trying to assess the probability of the event occurring. So for example, if you're taking a life insurance policy, he's assessing, one is that are you a smoker or non-smoker, how's your health, how old are you, he's considering your lifestyle. He takes into various parameters such as this, and he will then arrive at, is this person worth insuring, and what's the probability that this event will occur. We also have insurance companies which give you motor insurance. They also have property insurance, fire insurance. So these underwriters assessing a different kind of risk as not a risk in terms of is the customer going to default in case of what we do at a bank. As far as international degrees are concerned, I do not feel that it's an essential. We are very happy to recruit people from Indian B schools. An international degree from a very high renowned institution will have an advantage over others. However, the kind of roles that those particular students will require will be also highly complex roles, which currently is not what we have in the offering. I don't have sleepless nights. It's not something which worries me at night. However, our job involves a lot of late hours and a lot of working on weekends and holidays. So that's something which is a con for this particular job. There is no worry as far as that what are you doing if it turns out wrong, will they kind of pull you up. That's not the issue with this. As long as you've done your job right and you're able to kind of give a rationale for why you're approving something, there should not be a problem. The second part of the question, which was on stability of the job. So foreign banks in India are perceived to be higher risk in terms of them. You had some recent episodes where banks have shut down the Indian operations. However, the larger banks in India, the larger foreign banks in India are generally pretty stable because of their large international operations and their very big presence in their parent countries. They generally should not have a problem as far as job stability is concerned.